April 12th, 2024 show report. Thank you for joining us. I'm going to get right into it. So the March stats came out, and overall, what we're seeing is home prices aren't necessarily moving much. They're kind of staying a bit stagnant in terms of the actual prices of properties on a general basis. When we're talking about the greater Toronto area, Hamilton, Niagara, prices are staying fairly stagnant. What we are seeing is that the inventory, the amount of homes people are listing for sale, is increasing pretty significantly, and we're seeing that trend. What we're also seeing is that the sales to listing ratio isn't able to keep up with the amount of listings. So we're getting a lot of listings. There is a good amount of sales happening in comparison to last year, but that ratio of percentage of sales compared to listings is quite a bit down. So the sales aren't able to keep up with the inventory right now, even though it is essentially a seller's market. Not a lot of months of inventory in general, 1 or 2 months. Things are selling 75%. 75% of listings are selling at list price or higher in general, again, depending on the market. The reason for all this is because a lot of homes nowadays are being listed strategically. They're being listed at market value, or they're being listed a little bit below market value to try to drum up some offers and some interest in the property. Strategically, Sarah Snook from our team actually did a little bit of a report on this recently, specifically for Etobicoke, High Park, and Scarborough, which are the markets she operates in. Take a look at the video.
Hey guys, I want to take a minute and share my experience in the real estate market over the last 30 days in 3 areas I commonly work: Etobicoke, High Park, and Scarborough. Starting off in Etobicoke, average sold price $1,399,000 for a detached home. 74% of those homes sold at list price or over. 1.6 months of inventory. Now, High Park, my hometown. The average sold price was $1,988,000. 80% of those homes sold at list price or higher, with only 1.3 months of inventory. Moving on, Scarborough. The likelihood if you're purchasing a home in Scarborough, you're going to experience an offer night. With the average sold price of $1,267,000, 71% of those homes sold at asking price or higher, and 1.2 months of inventory. So, what does this mean? Fundamentally, we're in a seller's market. However, home prices are identical as what they were this time last year. I'm finding many opportunities out there for my buyers. This data can be confusing, so you need a qualified agent to help navigate the market and secure a property at market value without overpaying.
On the new home building front, we recently saw a 14% increase in building starts after a slowdown in new construction starts and also new construction sales. Colin Propone from our land and property investment team actually breaks this down in a recent video. Check it out.
Yeah, in terms of new housing starts, 2023 was a challenging year with high interest rates and inflation. Fast forward to 2024, we saw an increase of 14% in shovels in the ground and new starts, primarily in the 2 major urban centers, that being Toronto and Vancouver. And compared to Montreal saw a 9% decrease. So great starts for those 2 major urban centers, primarily in multifamily space, condos, high-rise, more dense product. When you converse that with a detached, we're down 9%. So that kind of shows us that moving forward, affordability is going to be a key factor in terms of what builders are willing to build moving forward. Having said that, because we've been delayed in our starts, that's going to affect the product type, and that's going to affect the outlay of product into the future, because we're already behind the 8 ball in terms of housing starts. So that's going to have an effect on the price moving forward.
Probably heard that the Bank of Canada held rates at 5%. We have some interesting insights from Michael Ugrin from our team on this.
It's long-awaited announcements from Bank of Canada, April 10th, 2024. Bank is holding the rate steady at 5%. That translates into a rate at prime of 7.2%. Inflation has cooled in the month of February to 2.8%, which is a good news for the Bank of Canada. However, we are expecting the solid growth for GDP in 2024 as well as in 2025. Now, the next rate announcements coming in June 5th and July 24th of this year. So we might gonna have to hold on a little bit longer for the rate reductions. I just want to know, what are your thoughts? Is the economy moving towards the recession, or is the recession already here? Comment below and let us know. Call us at Shoreview Real Estate Team.
Another fun fact, immigration numbers, specifically non-permanent residents, are at an all-time high since 2000. 380,000 new non-permanent resident immigrants into the country recently. Mehran from our team breaks this down with some insights on personal experiences as it relates to immigrating to Canada. Take a look at this video.
In Ontario, 360,000 people, new non-permanent residents, which are their immigrants, and we see at its peak since 2000. I have many Persian friends that they say they get their visa, whether it's visitor visa, study permit, or work permit, in 2 to 3 weeks, which is amazing. But in the time that I was staying, it used to take like 2 to 3 years, which the result will be impacting not just the rental demand, also the housing prices and the prices on rentals.
Other than that, a couple other things going on, insights in the market. Canada did announce that they're going to be offering a 30-year amortization for first-time home buyers on new homes to motivate new home buyers to get into the market. The banks will be offering a little bit of a longer amortization to allow for lower monthly payments. So that's an interesting headline that just came out this week. Investment side, we obviously know that Toronto recently announced the ability to take any single family freehold property and turn it into 4 units across the board throughout the whole city. They launched that about a year ago now. So we're seeing a lot of investors take those single family properties and convert them into 4 units, 5 units, independent dwellings where they can now go out, create some housing and obviously collect some rent for those units. It's a very interesting investment strategy in the city of Toronto, and other cities as well. But one interesting property we came across in East York on Mortimer, where the investor took a single family property, 4 units in that property, but as opposed to doing so and then renting those units, he actually condominiumized those 4 units and is now selling those units individually, which is something I've never seen before. Very interesting investment strategy. We're going to continue to see many more interesting, unique investment strategies that'll help create more housing, create more units as the housing crisis, becomes more and more serious due to the fact that you can see the immigration numbers are skyrocketing, and meanwhile the building starts and sales are staying pretty stagnant. So interesting insights this week on the show report. Hope you enjoyed it. Have a great weekend. All the best. See you again in a couple weeks. My name is Robert Yanachak. Thank you for tuning in. Make sure to give us a shout at the Shoreview Real Estate Team, powered by New Street, with any real estate questions you may have. We have an amazing team all across southwestern Ontario, Niagara, Hamilton, Burlington, Oakville, Mississauga, Durham, Northumberland, York region, all across southwestern Ontario. We have amazing advisors. Give us a shout if you have any questions.